Hi, we're going to have a look at technical analysis today. Roll the intro, tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way to inspire you in your own trading. So if that sounds good, please click the little subscribe button. It genuinely motivates me to do more of this. So where we're up to? Well, all of this month I've been doing a series on small account growth because it's the #1 email that I get. And if you've got a query, you'll find my contact details in the description. Very easy found. And it's always the same theme. How do I take £200 into £10,000? Well, that's quite a tall order. Not that it can't be done, it's just not going to be done in a week. You know, it takes time to build it up. Because to the outside world, trading is perceived in two ways. One, it's quick money, and you're going to have one of these.
You ding dong!
Oh, make it stop!
Whereas in reality, if you go for that, you're going to get this.
Matron, take them away! Oh.
So, don't, you know. And to somebody who's never traded, it's just gambling. But trading is not gambling. If you're looking for quick money, it is. You'll over leverage, put too much risk on, and you'll over trade, and you will get nowhere fast. Think of the hare and the tortoise story. You know, slow and steady won the day, and that is the truth with trading. You know, just trade at your own pace, once, twice a day, good setup, and you'll find that you have more money come the end of the week. It's great when you have a winning streak and you can go boom, 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 one after the other. But you will hit a brick wall, and that brick wall will take everything you've earned off you. So that's where technical analysis comes in. You need to know what you're doing. So what I'm going to do is, I'm going to grab myself another coffee, because we all know Scruffy likes a coffee. And I'm going to jump on the screen, and I'm going to give you a brief overlay of what I think technical analysis is. And then as the series goes forward, we're going to break it down further, driven by your comments. So please drop comments below if there's a certain indicator you want me to look at. And I'll thread it into the series, because that's the idea. So we'll look at what an RSI is, how it's built up, what you look for. Then we'll look at a CCI, a moving average, stochastic, all of the crowd favourites, if you like. And the idea is, at the end of it, you'll be able to piece them together and make your own trading style. You see, there is no magic pill, and there certainly is no holy grail. And I know that by the emails that I get, because people will look at what I do, you know, and I show quite a lot of it in the Scruffy Squad. And I'll still get an email off one of the guys saying, well, what about if I add this into it? And it's fine. Try it. Back test it. I do what I do because it works for me. You do what you do because it works for you. Because we all look at the charts in a different way. And we'll all see technical analysis in a different way. So what I'm going to try and do is give you a foundation so that you can understand what it is that you're looking at, and hopefully get an idea of the things that I look at, because that's an edge. You see, if you know what everybody else is looking at, you can make an informed decision rather than going in blind. So let us go onto the screen and we'll see what we can find. Okay guys, so just got a clean workspace. I'll just pull up a market. Well, cable's at the top. Like cable, trade it most days. Very technical driven market. which fits in well with today's subject of what is technical analysis. Well, for me, I describe technical analysis as the study of trends and turning points. There's a trend, there's a turning point. Okay. And then I break it down into two categories. You have static and variable markers. So what does that mean? Well, the price is a variable because it moves, and any moving indicator is a variable. But then you need target points and points of reference, which are static. And the static ones will be locked in time. And it doesn't matter if I'm looking at an hour or a 5-minute chart. That static piece of information I've put onto the chart will be constant. All right? Whereas a variable will change from time frame to time frame. Not the price. The price will do what it's going to do. But an RSI will be different on a 5-minute to what it is on a 4-hour. So the variable, okay? And what we are trying to do as traders and technical analysts, if you like, is to have a common thread across the time frames, and then you can make an informed choice. You see, to the outside world, most people think trading is gambling. It's not. It's not even close. Yes, you've heard me say if you have a hit rate that is less than 50%, you are gambling. And for me, you are. It's little more than a coin flick. Well, in fact, a coin flick is probably better than what you're doing if you're less than 50%, because in theory, a coin flick is a 50% system. So let's break this down. What are we looking at? Well, the first thing you need to do with technical analysis is kind of look at the big picture. You see, too many people, they'll come onto trading and they'll go, 5-minute chart, that's it, I'm away. What is this telling you? What can you actually see? Well, you can see a solid drive up, slowed down, and now it seems to be moving up again. Brilliant. So I'm going to buy it. Are you really? Based just on this? No. The first thing you need to do is look at the bigger picture. Now you can go out to the 4-hour, and that agrees with you. Yes, it's going up. It's going up. You can see it's going up. It's in pretty solid move, you know. There's nothing to say that it's not. That's been up. That looks like it's going up. And there's a good incline. Take it to a 1-hour. Well, this is telling you a little bit of a different story. Yes, it drove up, but didn't half sell off. It slammed its way back up, stalled, it's moving up again, but it is stalling. And I know that because there's a wick at the top. And I would be watching to see how far that wick moves up. So 3 time frames, 2 of them kind of confirm, but the important one doesn't. And why do I say the important one? Well, if you're swing trading, a 5-minute chart doesn't even come into it. You look at a 4-hour and above because you're looking for the greater trend. But when you're day trading, you're looking for the trend in the here and now. And the best time frame for it is 1 hour. And if I could only have one time frame for anything that I do, it would be the 1 hour. It's fast enough for me to gauge it throughout the day, but it's slow enough for me to see the greater trend as well. Okay, so for me, it's a perfect time frame. It's a very easy time frame to work with. But this is just visual storytelling. I haven't got any clues as yet. I need to find some way of finding out what the market's done in the past to see how it will affect the future. Self-fulfilling prophecy.
Prophecy caused all this trouble.
Sorry. I am an aging child. I love all these fantasy films, and it's probably why I've got my toys all around my desk. And I do like my clips. You know, I'm not really into boring videos, and I do this for enjoyment, so it amuses me. Sorry. Anyway, as I was saying, we're looking for a self-fulfilling prophecy. I nearly did put it on again there, but I didn't think I'd dare. So how do you do it? Well, you would need some form of target points, some markers, if you like. And that's where support and resistance comes from. And for me, above any indicator going, support and resistance is king. Going back to being locked in time, because it is a constant. And if it's happened there before, it's a reasonable assumption it will happen again. So what we'll do is we'll just do line of sight. In other words, best fit. Doesn't matter if you're using wicks, bodies, or a combination of the two. And I'll show you for why as I build this up. What you're looking for is best fit. Okay. So you can see it's topped out up there. It's pretty much where it's been. So you've now got a bit of a range here where the price has reacted. It's bounced off there, it's gone up there, bounced up, it's come back down, it's gone round, and it's come back to the same area. Now within it, there is another area kind of there. And again, you can see it's been to that area before, it's reacted, stopped. Self-fulfilling prophecy. Okay. Move a little bit further down. It's topped out there. You can see it. Come across. Oh, what do you know? It's happened again. You can see that it's stalled kind of around this area. And what do you know? It's happened before. And then again, at the bottom, you can see it's bounced off. So now you've got a variable and a static. Two very, very good pieces of information. And that's all technical analysis is. It's pieces of information that you gather and you make an informed choice. You know. So at this moment in time, if you look at the last sort of couple of days, we've had a solid move down. This candle here is a clear rejection. They have loads of names for candle formations: shooting star, starburst, dragonfly, doji, hanging man, whatever you want to call them. When I see something like that, it's a hammer. Looks like a hammer, it is a hammer. Right? And I just speak in a way that I understand. Okay. And why is that? Well, you've got a long tail down, small body pushing to the top third. All right. So that tells me the pressure's up. Okay. Why would I think that? Well, like I say, long tail. This is an hour. So for a very long time, buyers were pushing like that. And they absolutely forced that up. All right. And the next candle is green. So I can see an area that it's rejected, buying pressure up, a green candle. It's fair to assume, just by candle count, that this is going up. 1, 2, 3, 4, 5. So for 5 hours it was selling down. These people need profit. So is it reasonable to assume that they might come back up? Well, put a little order there to target there. Technical analysis, right? Based on a little bit of information. And the exact same things happened up here. So again, put an order under there, down to the next line, boom. Because all of that was buying. Can't be sustained. Somebody has to give. There you go. Now, I said earlier on, don't worry about the wicks. Why was that? Very simple. You see, I've seen people where they talk about zones and they'll go from the top of the wick to there, and the zones are bloody massive. So you end up with nowhere to move. So all you need to do is just put a little eye shot zone in. You know, it doesn't matter how you do it. I just use a fib tool, and it's predefined. And it's just quick and easy to draw in what I want. But you could do it by eye, sort of 5 or 10 pips either side of it, gives you a zone. And I'll explain a little bit as to why you use zones rather than just the line. Well, it's basically because the market is dynamic. In other words, it mightn't quite get there, but as long as it's there or thereabouts, you can then make a decision as to which way you're going to trade. So for argument's sake there, the market, if you had your target bang on that line, it didn't quite get there. But what if you had your target just on the base of this, you know, like here, or give you an example, like there, that would have been in. So both, and that's what you're looking for. It's just giving you a little bit of wiggle room, because it doesn't matter what you're looking at on the charts, nothing is pit perfect, and it is always going to be best guess. But you want your best guess as high up the scale as you can get. Okay, so that's a basic makeup of technical analysis. Now you use other things to help you. The next most popular thing that most people have on a chart is a moving average, and you only need 1 or 2 on. And how do you use it? Well, a 20 is quite a good one for day trading, and you can use it as a filter or a trailing stop. You can use it in many different ways, and a moving average is exactly what it says it is. It is just an average of price over a period of time. So this is 20. So for 20 candles, it plots the price and then works the average out. Okay, which is why it becomes a variable, because if I drop this onto a 5-minute chart, it'll be 25-minute candles, not 21-hour candles. So it'll look different. Whereas these are static, they'll be exactly the same. So I can say to myself, okay, I am only going to get involved when it's below an area of interest and the 20. So this candle here comes down, it has broken the 20, closed below the 20, and closed below a support and resistance line. So I could put an order in under the close and ride it in. You know, I like to put it on the other side of a candle. So on this case, I wouldn't. I would be waiting because there's nowhere for it to go. So you wait for the next candle to close. There's your entry. Why is that? Well, that's pointing down heavily. It's had 2 closes below that. So that's a good indicator. Put an order under there and I would ride it into the next zone. Simple as that. And then when it does it again, which it has there, I could try and get to the next zone. Or if you were doing it similar to how I would open a couple of orders up, I would ride that there, close that off, let the other one run, and you would have a stop loss behind here, trailing it. Simple stuff, okay? And that is it. It just guides what you are doing. But this is lagging, which is why you have to use something else to help your decision. So what else can you use? Well, you can put another variable on, an oscillator, like this, RSI. And if you're not seeing one of these before, it's relative strength index. Standard settings is 14 periods, in other words, 14 candles. And it is banded between 0 and 100. If it gets above 70, it's classed as overbought and it's expecting a reversal. And if it's under 30, it means it's oversold and it's expecting it to go up. So it's trying to predict the future, but it's still lagging. All right. So again, it is just a guide, but you can add it to your pieces of information. So there's your 2 closes. what's the RSI telling you? Well, it's pushing down and we're not at an exhaustion point yet. So yes, I've probably got room to get to here. Simple stuff. Then when it gets down here, there's your reversal, which we were talking about earlier. It's closed above a zone, it's closed in a zone rather, but above the S&R line. Okay. And the next candle is showing signs of oversold. So could there be a turning point? Well, this next candle we're talking about is confirming there is. And it's coming back to equilibrium, in other words, between the two bands. So again, put your order in into the next zone. Simple, simple stuff, guys. And that is what this is all about. You know, don't cloud your charts up too much. I did have a chart sent to me that looked like this. No, it wasn't that one, sorry. It was the MACD and a stochastic. And it had 4 of these bad boys on. I never saw anything like it in my life. There you go. So there we are. Can you read that? Because I can't. Terrible. Absolutely terrible. So keep it clean. Keep it simple. And just look to read simple indicators. But the main thing is keep it as a guide, guys. This was really just a very quick overview of kind of what technical analysis is and how you read it. Now, we'll go more and more into it as the series goes on, where I'll pull apart particular indicators because they're a little bit like a dance partner. You know, you've got to get into the same groove, if you like. Me, I'm a disco duck. I can't dance to save my life. But doesn't mean to say that I can't sort of pop a little sing-song every once in a while and tap my foot. And that's all I do. So what I'm going to do is I'm going to wind it up now. And I'm hoping that I've given you a little bit of food for thought. Please drop in the comments the indicators you want me to look at, because you'll build them up to your own strategy. And once you've made your strategy, stick to it, just using basic building blocks. And you should, by the end of it, learn how to make a profit. So there we go. Anyway, so it's been a great day. The little challenge is, well, I keep calling it challenge. It's not. I just want to do it to show that it can be done and basically sort of inspire. And that's the whole idea of this channel, just to inspire. So there we go, rambling again. So remember, guys, do what you love and the money will follow. I'll see you all in the next one.